Hey, good morning, guys. It is Friday, October 27th. Got ES moved up a little bit off the daily three yesterday, but we're a little bit bearish, and I'll show you why on the chart. I've got the chart marked up. 41.55 is the options mean for today. I've got that on the chart, and you can see this opening range 41.55, 41.57, and 41.60. There's your bull bear above and below line. So we're holding above the open, the current day open and the bull bear bar, but we hit the at the money line and held it 41.80. So 41.80 and above is going in the money. So there's your bull. We have not bulled at all. We're sitting, in fact, on the 41.80, looking like it wants to drift back to this 41.55 again and hang out. And then who knows what's going to happen, right? We've got two bull bear zones right here. And JATS has two means, um, the session open and the session close. And you can see that the mean for the session, let's just show it to you. Click on your level and right click to the properties, and this one is the the open. Okay, so the one below it is the session close. And so this is your current day open. Calc on the open, and it matches perfectly my distribution. So moving away from it, I can get down to our levels, and you can see that I am very close to the implied volatility level going from in the money to out of the money. So you can see that out of the money tails match my distribution. Their out of the money extends all the way down to 40. I think it was 15, but I can pretty much rest assured that 37 or 47 would first catch price. And then the lower one, if it breaks, we can extend it out the full 3 to 3 distribution. So what's so exciting about JATS is we can measure from the middle of the mean to the 3 and then extend that out one time and two times. And you'll be surprised that when the market does start moving, it goes to the measured moves. But so their final line in the sand, if you will, we have more. So that might be a great put spread for you if you're looking for your out of the money put spread. So you can see on the QUIKSTRIKE chart, the option traders will use that 10 delta 40.95, and way out of the money, this third one would be 40.15. So that would be another idea that they'll be using. And similarly on the call side, I've got the levels marked. You're out of the money is at 4,300, in the money 42.15, and the at the money, which we bounced off of at 41.80. So it looks good. We'll switch this over to the SPX. And I've already got this marked up, so you can see the mean is way above, and we're sitting on the threes and this at the money level, and that we bounced off of once. So you know, the 41.24 is my other daily three, and that right here, is just one tick away from your at the money to the in the money. So if we do, we might possibly get a pop and drop here, is what I'm trying to say, and have it come back inside, back to the mean. So we'll be watching for that. If it breaks, then we're heading down to your in the money, and I have some tails to look out for. 40.98 again, hitting that in the money line. So that looks like a good level if we do break the threes. But we'll just keep an eye, out for it. I very well think that we might get a turnaround soon, and I'm basing that on some longer term support. 40.73. So 40.73 is my pretty much my line in the sand. And hang on a second. But our secret sauce that in the option pricing sheet does not have on it is right here, and that's our 23-day one, 41.18.34. And so if we want to see where that lines up, oops, sorry about that, 41.15, 41.20. So right here at the 22 delta, 41.18, 19.22 delta, so 20 delta. 41.18.34. That is the 23-day one. So I'm looking if there's going to be a bounce. If there's going to be a bounce, that it's going to be on our 23-day one and possibly 4100 because of the volume, which we want to take a look at real quick. So you can just click on your implied volatility level and take a peek. So here's your big put at 4100. And it looks like 4118, 4110 is right here at, your last line of defense below that 25. So before the 15, between the 15 and 25 delta. So 4120 right here, protecting my 4100. So we'll see. We've got big calls appearing, and that is your sticky because it's telling the market to come back up. You see that? So once we hit this slope here at 70, 75, if you go from 70 to 75, we're on an up path to 80, and then anything above 80 is just pure up. 4180 and higher. So if you're trying to put a plan to go into next month, that's what I'm going to be talking to you about next week. And I'm going to be looking at a new platform, Options AI, and going through the process now of getting that set up to show it to you. Hang on one second. So go over here and register. Once you get your account set up, then you can see the platform. Right now, I'm not. I'm in the process of getting it set up. So next week I'll show it to you. But it looks promising because they can give us a projected path on the chart and like a little timeline, linear regression line showing those future expirations. And that's the same thing that we can do with JATS PT by putting the threes on the chart going out. So if we wanted to put a new chart together and just look at the 1 month, 2 month, 3 month, or the 1, 2, 3, 4 week threes, let's just do weekly threes going out. Hang on, I'll show you what that looks like. And so here's the weekly threes for 1 week, 2 week, 3 week, 4 week, 5 week. And so you can see the projection. We're on the 1 week right now. The 2 week is down here at the in the money. There's your 3 week at your out of the money. Or, yeah, here's your out of the money going down to their into the third standard deviation, but we've got actually weeks going below that extending from 4,000 to 3970. So it'll be interesting to have the options AI showing the implied volatility levels. So we can match the implied volatility levels with the real volatility levels, or should I say the historical volatility levels as measured by JATS PT. It'll be really, really nice to see. I'm really looking forward to this. So, y'all have a great weekend, and we'll talk to you later.